Hey guys, what's up? Welcome back to another live stream. Am I online? There you go. Welcome back to another live stream. Perfect. Everything is okay with my audio. How are you guys doing today? Good afternoon, good evening, or whatever it is. Cindy, how are you? Josue Carrasquillo. What's up, buddy? Michaela Sanamug. Is that a French last name? Probably, right? Asia Babs, Rob Richardson, Randy McRae, Jerry Alfonseca. What's up, bro? Anthony Harper looks similar to the bird flag from the other day. What's up, guys? Are you ready for another CPI data report? Did you guys get puts or calls? What did you get? I told you guys to not, I warned you about holding stuff overnight. Maybe my warning fell on deaf ears, most likely. And you guys are taking a gamble on the CPI tomorrow? Is that the case? My first live stream, pumped up. What's up, Dwayne? How are you? Okay, guys, so today we had such a boring day, another narrow ranging day. Cindy says yes. What did you get? Calls or puts? Let me see. And I guess that if you guys got puts or calls, those are expiring tomorrow, most likely, right? I guess. Okay. So, Monday and Tuesday, both days were kind of boring. But tomorrow we're going to have volume picking up. We will see volume picking up. And we are going to... I didn't trade today. Yeah, that was Wayne Tucker got puts. I only opened one collapsion of Lockheed Martin. That's all I did. And I closed 200 shares that I had of C3AI. But other than that, I didn't do anything. The CPI is very likely to give rise to some volatility tomorrow. So I didn't want to. I don't want to have a bunch of positions opened when we are, ahead of such an important report for the markets. I stayed out. C-Down says I stayed out of the market, and today got the warning for day trading. 3-day trades. So you cannot. You could be doing. You could be doing call debit spreads and put debit spreads if you happen to run out of day trades. That is something that I can explain to you guys maybe in another live stream. Mario has, I think, that some sort of tutorial about doing calls and puts debit spreads in order to go around the day trading restriction, right? Calls, Zaida Haman. Okay, so what happened today? As I said, another narrow ranging day, not really much to do today. However, the Russell 2000 went up today 0.80%. The NASDAQ went down 0.43%. The Dow Jones went up 0.29%. And the S&P 500 pretty much closed flat. 4,108 points. Crude oil keeps on going higher. This is going to be fun inflation-wise. If crude oil happens to take out $85, it went up today 2.19%. Gold, the old man, keeps on going higher as well. Maybe on recession fears. Goes up 0.78%. Silver went up 1.18%. And the 10-year Treasury yield, the worst enemy of tech stocks, when we have inflation fears or when we have an inflation narrative in the markets, went up today ahead of the CPI. This is just a curiosity. It went up today 0.56%. I have been telling you guys about the sectors. Remember, the S&P 500 has 11 sectors, and the tech sector was the sector that did the heavy lifting in Q1 of this year, during the first 3 months of this year. And now the tech sector, which happens to represent something like 25% of the total market capitalization of the S&P 500, is taking a breather. And If this sector cannot go higher, then the heavy lifting has to be carried out by the financial sector, which went up today 0.87%, and the healthcare sector. These three sectors are the most important sectors inside the S&P 500. So, and I know that you guys love trading in NVIDIA, AMD, Tesla, Apple, and so forth, Microsoft. You have to keep a close watch on, and you should be monitoring the tech sector on a daily basis if you are actually taking trades with the stocks that I just told you guys about. If in any given trading session you guys see the tech sector trading in the red, then that's a red flag in order to start trades with the stocks that I just told you guys about, the NVIDIAs of the world and the Teslas of the world and the Apples of the world and so forth. So we are seeing a very clear rotation from the big winner of Q1 of this year, so the tech sector, into the losers of Q1 of this year, energy, financials, industrials, sorry guys, materials. This is something that you have to, that you need to follow, that you need to follow up on, because if the tech sector keeps on pulling back and this rotation, as I just said, from the winners of Q1 into the losers of Q1 keeps on going further, then we might be seeing two potential outcomes over here. First of all, the SPY having trouble in order to go higher, and maybe the market's actually pulling back, as I just said, if the financial sector and the healthcare sector don't do the heavy lifting from now on. So this is something that you need to keep a close watch on, as I just told you guys about. Hey, please drop a comment down below. Let me know what stocks do you want me to go over. And let me tell you the most important facts that you need to know about the CPI that comes out tomorrow at 8:30 a.m. Eastern Standard Time. So we are going to be trading tomorrow the technicals. I am going to be providing you guys the numbers, the areas of interest as soon as this report comes out, and the other pro investors in Discord are going to be doing the same thing. If you want to know about the report itself, I can give you some. I can tell you guys what the markets are going to be waiting for, but we're going to have 1 hour pretty much from 8:30 a.m. until 9:30 a.m. Eastern Standard Time, which is the time in which the trading session is going to open, in order to let the markets react to whatever the report says, and then obviously we're going to be trading the technicals as we always do. So the most important metric tomorrow by a mile is going to be the core CPI. This is an inflation reading that doesn't include food and energy. So you guys can know about this fact. The media and or let's say that the big financial media is going to be focusing on the let me show you over here, this one, the headline CPI, which is expected to come out at 5.1%, or reflecting an increase year over year of 5.1%. Here you guys can see some estimates from the most important banks, and for the most part, this report is expected to come out at around 5.1 or 5.2%. So Bloomberg expects this report at 5.1%, Morgan Stanley 5.1%, Goldman Sachs 5.1%, JP Morgan 5.2%, Bank of America 5.3%. So as soon as the report comes out, the big financial media is going to be, let's say, covering or going over this metric of the report. However, the most important metric, as I just told you guys about, is going to be the core CPI, and especially the reading month over month, which is expected to come out reflecting an increase, again, month over month of 0.4%, whereas last month we got the report reflecting an increase of 0.5%. So, in my opinion, this is my personal opinion, and I could obviously be mistaken. If we happen to get a reading below 0.4%, this is going to be very bullish, and I am expecting the markets to shoot up higher. Let's say that we get a reading at 0.2%, 0.1%. What about a negative reading? Who knows? These kind of reports sometimes are unpredictable. So any reading below 0.4% should have a positive reaction from the markets, and any reading above last month's reading, which was 0.5%, in my opinion, is going to give rise to a sell-off. Okay, so this is the most important metric if you guys want to have a better understanding of what the markets are waiting for tomorrow about the CPI. However, since, and as I just told you, the big financial media is going to be focused on the headline reading, which is expected to reflect an increase month over month of 5.1%. Here we have some estimates from Goldman Sachs about the potential reaction of the markets. So according to Goldman, if we happen to get a reading below 4.6%, remember the median estimate is around 5.1%, then the S&P 500 is going to rally 2%. If we get a reading from 4.6% up to 5.1%, the reaction to the upside is expected at around 1%. If we get a reading from 5.2% up to 6%, Goldman expects the SPY to go down from 1% up to 2%. And if we get a reading above 6%, then Goldman is expecting the SPY to drop at around 2%. So if we take a look at the technical chart of the SPY, it closed flat today. It only went up 0.03%, and it closed the trading session at 409.72, $409.72. So let's do the math about the two bullish and bearish outcomes that Goldman is predicting for tomorrow. Let's say that the SPY goes up 2%. Let's say that we get a better than expected reading about when it comes to the core CPI. Let's say that we get a 0.4% or 0.3% on the month over month reading. So if the SPY goes up 2%, guys, we are pretty much looking at 418. So maybe this might be the highest that the SPY could be going up tomorrow if, as I just said, both reports or both metrics, the month-over-month reading of the core CPI and the year-over-year reading, when it comes to the headline CPI, come out as expected. Maybe 418 to the downside. What happens if we drop 2% tomorrow? Then, if that were the case, guys, the SPY could be paying a visit to this semi-ascending 100 DMA around 398. Which, since we are talking about the 100 DMA, should be a very important line of defense for the bulls. So this might be the range that we are going to see tomorrow. In my case, guys, unless we happen to get a very positive reading on the core CPI, let's say that we get a 0.4%. Since I already know that the markets are expecting that reading, 0.4%, and since I already know that the bulls have failed on multiple occasions at 418, this might be a spot in which I might be looking forward to getting put options. On the flip side, if we see a quick drop down to this 100 DMA around 398, I think that might be, let's say, an opportunity to buy the dip in order to take a bounce back up trade on the SPY. So these are the scenarios that we have on the table for tomorrow when it comes to the CPI data report. At the end of the day, guys, the most important is the price action. So we wait for the report to come out. I am a macro guy. I love the macro stuff. I am going to be taking a deeper look at the report But at 9:30 a.m., guys, when that bell rings and the trading session starts, I am going to be simply trading the price action. So that's it. These are the most important levels that I am going to be keeping a close watch on tomorrow. Okay, any questions about the SPY or about the CPI data report? It's been implemented when it goes fully online. Put all around. Dwayne D says, hit that like button, family. Yeah, please hit that like button, guys. Absolutely. Do that for me. Do me that favor. Google and Netflix. Okay, let's start out. By the way, okay, perfect. Okay, let me go over. Is everything good with my audio, guys? Google and Netflix. There you go. Yeah, everything is good so far. Okay, let me take a look at Google. Alphabet. Okay. So it went down today 0.78% and it closed the trading session at 106.12, 106 bucks and 12 cents. This is an interesting chart. The 100 EMA is starting to rise little by little. The bulls already reconquered this downward sloping 200 DMA, and I can see over here an ascending 5 DMA. So the fact that I am visualizing here an ascending 5 DMA, that implies that buyers are regaining control of Google in minor time frames. This is a very good sign. So we have a very important area of supply or resistance over here at around 107 bucks. 107 bucks is a previous resistance back from early February. So if the bulls can take out this area, this level, and they can consolidate, as I just said, slightly above $107, $107.50, this could be a sign that they are gathering momentum in order to being able to fill two gaps to the upside. The first one, 110 bucks. This is a previous resistance back from April 6th. And a second gap may be up to $113, which is a spot in which they fell at in early February. So this would be the bull case. They closed today slightly below 107 bucks. So if they failed at taking out 107 bucks, which, by the way, guys, is also a previous resistance back from mid-March, then what about a drop down to this downward sloping 200 DMA, $102? This might be in the cards. This is an interesting chart. The RSI is sitting at 50 points on the 4-hour chart. So Google is neither oversold nor overbacked. So in my opinion, both trades, the bullish one and the bearish one, are very clear over here. Taking out 107 bucks with the tech sector going higher. Remember, you guys, and take a look. I just told you that you guys love taking trades with tech stocks, and take a look at the tech sector today. This was the only sector, communication services also went lower today, but it actually was trading in the green, guys, communication services, until we saw the massive drop that we saw into the closing bell. So for the most part, during the whole trading session, the only sector that traded in negative territory was technology. So if I am thinking about taking a breakout trade with Google, taking out 107 bucks and filling this first gap at least up to 110 bucks, I need to make sure that I am not taking this trade with the tech sector going lower. And by the way, Google also trades inside communication services, the sector that I just told you guys about. So I'd better make sure that both tech and communication services, XLC, are going higher before trying to take this breakout trade to the upside with Google taking out 107 bucks. On the flip side, if I am seeing Google trying to burst above 107 bucks with the two sectors that I just told you guys about, tech and communication services, going lower, then this might be a sign that sellers are going to prevent Google from bursting above 107 bucks. And if that were the case, then we could be grabbing puts and we could ride them down to this downward sloping 200 DMA at 103 bucks. So these are the two trades that I am seeing over here in the case of Google. Let me take a look at the market structure of Google. So what is supply and demand looking like? Let me pull up here the market structure of Google. Remember, guys, this is a tool that I use all of the time. What you guys can see on top of the chart is the demand, so buyers, and what you guys can see at the bottom of the chart is the supply, so sellers. What we want to see, ideally, what we want to see when it comes to market structure is an ascending demand and a falling supply. What are we seeing over here in the case of Google? I have some sort of ascending demand, but as of now, is below the supply, and I have the supply slightly below average. When I say average, when it comes to supply, I am talking about this dotted black line that you guys can see over here. When I have the supply above this dotted red line, that implies that the supply is above average, which is not a positive for any stock. What we want to see is supply dropping and below average, and we want to see an ascending demand that is above the supply. So in the case of Google, I have the supply kind of descending and below average, and I can see the demand little by little starting to rise. So I have an acceptable market structure for Google. That might imply that in normal market conditions, the bulls have a first shot at taking out $107. What is the name of the website that shows? This is Market Structure Edge. I need to pay a subscription for these guys, but you know, I make a living of this business, so I have to pay for whatever I have to pay. $100 a day. This is no publicity for this company, but this is a tool that I use on a daily basis, okay? Very useful in order to determine, guys, or in order to confirm. Okay, let me rephrase that. If I have a downtrend and I see buyers starting to step in because I can visualize an ascending 5 DMA, which is the very first the very first sign that I take into account in order to determine that buyers are starting to show some interest in any downtrending stock. So if I happen to see that, I want to confirm that condition from a market structure standpoint. So I want to see the demand starting to go higher before starting a trade with any downtrending stock, which I don't like downtrending stocks. I rarely ever take trades with downtrending stocks, but if that were the case, sometimes there are, exceptions to the rule. So I use this website. However, on the flip side, if I am seeing an uptrend and I believe that any given stock can keep on going higher, then I also check on this website, and I want to confirm when I double check or when I reconcile a technical chart with the market structure of any given stock, I want to confirm that buyers are in control of that technical chart. So ideally, I want to see a rise in demand that is above the supply. Anytime, absolutely. Bitcoin has been going on a tear. Let me pull up here Coinbase. Okay. And mind you guys, as of now, I have an issue. I have some sort of problem in my mind. I have been dollar cost averaging Bitcoin since last year. So as of now, I am sitting on very nice gains. I have like $2,500 of gains. And I think that Bitcoin has an appointment with lower prices. So I am like, I have an average cost of 18,000, a nice average cost. But I'm like, I don't know, I am undecided about locking in the profit or not. Because you know what can happen. Bitcoin is very volatile. So it is trading at $30,000 as of now, right? Then what do you know? 2 weeks out, it could be at $20,000 once again, and my $2,000 worth of gains are gonna be gone. So that is something that is giving me a hard time. Okay, Coinbase goes up today 6.14%, closes the trading session at $70.19. So the bulls closed right above a very important spot at $68. $68 is a previous resistance back from early March. And the bulls have been making progress over here, guys. They reconquered the 100 DMA, 200 DMA. We have a semi-ascending 5 DMA. So I'm thinking that as long as the bulls can hold $68 as support, they could be gathering strength in order to fill this gap up to $84. I mean, we have two gaps. We have a first gap up to $78, which happens to be a previous resistance back from late October. And we have another gap from $78. And you guys know that Coinbase is a very volatile stock. So Coinbase could be filling this second gap up to $88 in no time. So very good. I mean, it is in a very good technical chart because we have a downward sloping 200 DMA. But I'm thinking that as long as the bulls can remain above $68, maybe we are about to see $73 or maybe $88 in the upcoming trading sessions. RSI at 67 points for hours, shot a bit elevated, nothing crazy. And mind you guys, if this support of 68, let's say that tomorrow we happen to get a way worse than expected core CPI. It comes out at, I don't know, the reading month over month comes out at something crazy, 0.7%. And the markets as a whole fall off a cliff. If Coinbase happens to take out this support of $68 on good volume, why not? There could be a short trade down to this 200 DMA at $60. This would be how much? 14% downside potential. Nothing to sneeze at. Okay, so check this out, guys. And I am about to show you guys the market structure of Coinbase. So as of now, since I have a downward sloping 200 DMA and the 5 DMA isn't rising, I am doubtful about the facts I am doubtful about buyers actually regaining control of the stock of this company. So I pull up market structure. Let me pull up Coinbase. Let me see what demand and supply is looking like. Let me see coin. There you go. What is going on over here? Take a look. I have a descending supply that is below the average, and the demand is starting to rise. So yes, the supply is way above the demand, but buyers, take a look at how the demand collapsed, and now it is starting to pick up. So I have, this is not the best looking market structure, but it is encouraging because the demand is starting to pick up and the supply is falling below the average. This is a good sign. So watch out for Coinbase holding $68 as support. Bro, what do you think of PayPal, break-off, triangle, and daily and weekly? Thanks. Let me take a look at PayPal. Sure. Let me see. And remember, guys, every single one of the technical analysis that I am carrying out in this live stream is subject to whatever the markets do as a whole tomorrow, okay? I just told you, if the CPI happens to come out worse than expected and they kill the tape and stuff like that, so if that were the case, the bullish possible outcomes that I am telling you guys about might be ruled out because of the general price action of the markets. PayPal goes down today 1.26%, closed the trading session at $73.58. Not a good looking chart, bro. I have a downward sloping 200 DMA, downward sloping 100 DMA. The 5 DMA is kind of flat. I mean, this chart doesn't look good at all. The bulls failed today right at this 100 DMA. I don't see any upside potential over here. Watch out for PayPal failing once again right at this downward sloping 100 DMA, because if that were the case, we could see it dropping once again down to $72, which is a previous support back from late February and early March. And if this support of $72 happens to be taken out as well by the bears, then we have another gap down to $70, which is a previous resistance back from late December. Not a good looking chart. I wouldn't be trading PayPal. I would be grabbing puts if PayPal fails at $76 approximately. So I would stay away from PayPal from a long perspective. However, yeah, I mean, let's be constructive over here. And you guys know that I don't like trading downtrends, but who knows? Maybe Take a look at how many times PayPal has failed right at this downward sloping 100 DMA. 1, 2, 3, on 4 occasions. So maybe if the bulls can reconquer this downward sloping 100 DMA, if they can burst above 77 bucks and they start to consolidate slightly above their area, this could be a sign that they might be potentially being able to fill this next gap up to 80 bucks, which is a previous support back from early October of last year. Let me take a look at the market structure. Is there any hope for the bulls or buyers over here? Let me see. Is my audio good? There you go. Okay. I'm just double checking on my audio here and there. Okay. Yeah, there is hope from a market structure standpoint, bro. Let's say that the demand has flattened out and the supply is decreasing and it is below average. So I can confirm from a market structure standpoint, and despite the fact that I don't visualize, I don't see an ascending 5 DMA, that buyers are starting to show some interest in PayPal. So maybe a breakout from 76 bucks could leave room for this gap up to 79 bucks or 80 bucks in order to be filled. There you go. Hey, Michaela. Microsoft, absolutely. Let's go over. It got killed today on no bad news, right? They just dumped Microsoft shares. It went down today 2.27% and closed the trading session at $282.83. So nothing wrong with the chart. I have an semi-ascending 100 DMA. The 200 DMA is starting to flatten out. However, the bulls failed and lost today the support of the 5 DMA, which is rising, but they lost this very important support at $287. However, the bulls managed to find support at 282 bucks, which is a previous resistance back from mid-March and also a previous resistance back from late March. So this is going to be a very important spot for Microsoft. Very good looking short, guys. Don't get me wrong. Despite the fact that the bulls lost the support of this 5 DMA at around 287 bucks, this is a clear uptrend. Microsoft is above the 100 DMA, 200 DMA. Nothing to complain about this technical chart. However, the bulls need to hold 282 bucks, and they need to fill this gap up to the 5 DMA that I just told you guys about, 288 bucks. If we can take this trade with Microsoft consolidating and holding 282 bucks as support, 282, 283 bucks as support, and we can write it up, or we can take this trade from 282 up to 287, we are looking at a 4% profit trade. This would be a nice trade taken to the upside. However, if this support of 282-ish happens to be broken to the downside, we have a gap down to 277 bucks, previous resistance back from early February. So this is an easy one. I think that Microsoft might be in the same spot that it was trading at last week when I live streamed for you guys. So this is a trade holding 283 and filling this gap up to 287. And if this support happens to be taken out, maybe a quick visit down to 277 bucks. The buyers are in control, so I would be more prone to taking a long trade with Microsoft filling this gap up to 287. Let me take a look at the market structure of MSFT. What is it looking like? Let me see. Believe in yourself. All of the time, we need to believe in ourselves. Microsoft. So what is going on over here? Wow. Here we have a tie, guys. The demand is rising. The supply is decreasing a little, but it is above average. And we can make the case that the demand is above the supply, slightly above the supply. So yeah, from a market structure standpoint, I do believe that Microsoft still looks bullish. And since the demand is rising and above the supply, I can make the case that buyers are still in control of good old MSFT. Okay, let me see. What other stock, what other request do I have over here? PBLA, Scott Carroll. Let me see, no one has asked about Tesla? Yeah, Cindy, there you go. I was like, okay, a live stream without Tesla, without going over Tesla, that doesn't exist. Okay, let me take a look at Tesla. Okay, so remember, the stock of this company is still in a major downtrend. We have a downward sloping 200 DMA, and we also have, or we can also see over here, a downward sloping 100 DMA. We can also see a downward sloping 5 DMA, which is not a good sign. And take a look at how this 5-day moving average is signaling $185, which is a good sign because Tesla went up today 1.24% and it closed the trading session at $186.79. So the bulls need to hold this 5-day moving average at $186. If they can do it, then that's a good sign because that might be, that could represent an opportunity in order to gather momentum to maybe being able to fill this next gap up to $200, which happens to be a previous resistance back from late November. However, if the bulls fail at holding this 5-day moving average around $186, then watch out for support at around $173, which happens to coincide with this downward sloping 100 DMA, and at the same time happens to coincide with a previous support back from early November of last year. But mind you guys, before hitting this downward sloping 100 DMA, which is a very important support, the 100 DMA is a very important moving average. Let me show you over here this chart of Tesla. I was taking a look at this chart a bit before I started to go live for you. Take a look at this anchored volume weighted average price that comes from the January low. It is sitting at around $176. And guess what, guys? Tesla was under pressure yesterday, and it found support right at this anchored volume weighted average price that comes from the January low. So, in case of a drop, keep a close watch on $176, very important spot. And if this support of $176 happens to be taken out by the burst or broken to the downside, then I would also be expecting buyers to step in near $171, 100 DMA for Tesla. Oh, sorry guys, I left the main chart. For Tesla, my Tesla. Let me take a look at the market structure of good old Tessie. Alrighty, let me see over here. Okay. Wow, take a look, guys. Not a good looking market structure. We have a fall in demand. And despite the fact that the demand is slightly above the supply is below average. So, I don't know, guys. I don't know. The demand is falling, and it has been falling during the last 3 trading sessions. Or it has been falling, sorry, I take that back. It has been falling since late March. So I don't like the way that this market structure looks for Tesla. And let's see, guys. This support around this 5 DMA, 5-day moving average is going to be extremely important, 186. Let's see if it can be held as support. How about AI? I closed a trade today. Karen is asking about C3 AI. I closed a trade, a swing trade today with 200 shares. Okay, we got a short report, or a short report came out saying that the company is a scam and stuff like that, and it fell off a cliff. But the market, I think that this situation might be similar to the short report that came out about Square. So we saw an initial negative reaction, but then the markets were like, you know what? I am going to try to shake it off. This is the future. Artificial intelligence, optimism, and stuff like that. So the dip got bought up, which is a good sign. And on top of that, the dip was bought up at a very predictable area of previous support, $20. $20 is a previous support back from mid-March, and this is also a previous support back from early March and early February as well. The 5-day moving average is starting to reverse. It is clearly downtrending, but since buyers stepped in, we are starting to see the 5 DMA kind of trying to flatten out, which is some way somehow positive. And the bulls need to consolidate, and they need to start either closing candles, or even better, 1 or 2 trading sessions slightly above 24 bucks. 24 bucks in the case of AI is a previous resistance back from late March, and this is also a previous resistance back from late February. This would be a good sign. Closing candles, or even, as I just said, closing 1 or 2 trading sessions slightly above 24 bucks. This could be a sign that the bulls might be able to gather some momentum in order to fill this next gap up to 27 bucks, a previous resistance back from late March. If we were able to take this trade from $24-ish up to 27 bucks, this would be a 12% profit trade. And obviously, guys, you know that we have some sort of pool of AI-related stocks. If in any given trading session you guys see AI going higher along with UiPath and Google and Microsoft and stuff like that, so if we happen to see some sort of hype about artificial intelligence, that is a positive catalyst, no doubt about it, for C3 AI. So I closed 200 shares today, and I wouldn't touch it again unless I see it consolidating slightly above 24 bucks. We have an upward sloping 100 DMA. We can also visualize over here some sort of semi-ascending 200 DMA. So the short doesn't look that bad, but wow, guys, what a drop. Take a look at this disaster, right? But the bulls are trying to reconquer this 5 DMA, 5-day moving average that is starting to flatten out, which is arguably a good sign. Let me take a look at the market structure of AI. C3 AI. So what is demand and supply looking like? Let me see. We are 42 minutes in. Well, how about that, huh? And check this out. The demand is falling, obviously, because we got this short report. However, the demand is way above the supply, and we can notice over here that the supply is decreasing and below average. So, yeah, I'm going to re-add C3 AI to my watch list, and maybe reconquering 24 bucks and consolidating above that level might be a good sign for the bulls. How Netflix, Jerry Alfonseca, absolutely, and Ambrose Asante. How about ELF? Let me take a look at ELF and then Netflix. And I might be wrapping it up. 43 minutes. How about that? ELF Beauty goes up today. Wow, take a look at this chart, guys. Beautiful. These are the kind of chart that we need to look for. So ELF goes up today 0.15%, closes the trading session at $84.16. Beautiful technical chart, clear uptrend, above an upward sloping 200 DMA, above an upward sloping 100 DMA, upward sloping 100 DMA. Nothing to complain about ELF. But mind you, is ELF about to enter in no man's land? So is this the all-time high for ELF? Let me check. Yes, sir, it is. So this is a tough one, guys, because I don't like trading, even though this stock is in a clear uptrend, very beautiful technical chart. Obviously, the buyers are in total control of ELF. But once ELF takes out 86 bucks, it is going to be entering into no man's land. So we don't have any previous technical reference above 86 bucks. So this is a tough one. I wouldn't short it if that's what you're talking about, Ambrose. Please do not short or do not get puts on uptrends. There is no need to try to guess the top On ELF, I wouldn't do anything here. What can I say, guys? Maybe a pullback. The all-time high is at 86 bucks. What about a pullback down to this 5-day moving average at 82 bucks? ELF happens to find support over there, which is the most likely outcome because the buyers are in total control of this technical short. So from 82 bucks up to 86 bucks, this would be a 5% profit trade. So yes, this would be a 100% viable dip at around 82 bucks. It isn't overextended. It isn't overbought. We can see the RSI is hitting at 65 points on the 4-hour chart. And let me take a look at the market structure of ELF. Let me see. What do I have over here? There you go. Alrighty. Take a look at these guys. No comment. Can you guys see this? No comment. Rise in demand way above the supply, and we have a fall in supply that is about to fall below the average. A beauty. This is a beauty. I mean, and the name of the stock is ELF Beauty. This is just a coincidence. No pun intended. Awesome. Thank you very much for this call out. I didn't have this stock on my radar. There you go. No, not a problem. Okay, Netflix. Let me see. Good old Netflix. So what is going on over here? It went down today 0.23%, closed the trading session at $338.21. Nothing wrong with this chart quite yet. We can see a semi-descending 5 DMA. Nothing to be really worried about because we have an upward sloping 100 DMA, upward sloping 200 DMA. So I would wait for Netflix went down today 0.23% and closed the trading session at $358.21. I would wait for a process of consolidation slightly above $336, which is pretty much what Netflix did today. So if Netflix happens to consolidate slightly above 336 bucks, then we have a gap. We have two potential gaps over here. The first one up to 345 bucks. This is a previous support back from mid-February. And if the bulls are going higher on good volume and momentum, watch out for Netflix taking out 345 and maybe filling this next gap up to 351 bucks, which is a previous resistance back from early April. And what about this support of 336 bucks being taken out on good volume? This might be a short down to this 100 DMA. I don't like shorting, as I just told you guys, uptrending stocks, unless an important area of support is taken out on good volume. So this could also be a possibility in the case of Netflix. Let me take a look at demand and supply on Netflix. Alrighty. If ever request is made earlier in the chat, how do you see it? I'm new to this. So sorry. Lynette, no, I didn't see. So I mean I need to scroll up and take a look at you guys' requests. Netflix. The demand is kind of starting to fall, but it is way above the supply. And the supply is below average and also falling. So nothing wrong market structure-wise for good old Netflix. I'm new to this. If you have any requests, please let me know. And I will take a look at any stock that you tell me to before I wrap it up. 48 minutes in, guys. Any questions? Any further questions about the CPI data report that comes out tomorrow? Please let me know. So do you prefer the 5, 100, 200? No, the DMA. Those, the ones that you're telling me about, Hector, those are exponential moving average. I am talking about day moving average. So I have 5-day moving average, 100-day moving average, anytime, bro, 200-day moving average. The ones that you're told me are EMAs, exponential moving average, which is a whole different story. The moving averages, guys, that I use, or that you guys are seeing over here, and that I have been telling you guys, that I have been telling you about, doesn't change. depending on the time frame. An EMA and a simple moving average do change depending on the time frame that you guys are using. DMA, correct. Day moving average, correct. There you go, you got it. Bioenergonomics. I haven't taken a look at bioenergonomics in quite a long time. Wow, $1. Oh my God. No. There's nothing to do here. It went up today 6.86%. Closed the trading session at $1.09. Major downtrend, below a downward sloping 200 DMA, downward sloping 100 DMA, downward sloping 5-day moving average. Nothing to do here. Absolutely nothing. Please stay away from bioenergonomics. You guys know that I don't trade penny stocks. We have a pro investor here in Discord that does trade penny stocks. Alpha trader, you guys know. Yeah, you guys know him. He's my buddy. He knows what he's doing. That's his style. But, I mean, according to my personal style, we should stay away from penny stocks. I know that Alpha does a very good job on penny stocks. I don't know how he manages to do it. So congrats to Alpha trader. But don't ask me about penny stocks, but because I'm going to tell you guys to stay away from these kind of stocks. Alrighty. Okay. So we have Palantir. Lynette is asking about Palantir. Okay, let me go over PLTR. There you go. So went up today 2.62%, closed the trading session at $8.61. Wow, this is a technical chart that is starting to look kind of compelling. We still have a downward sloping 200 DMA. The 100-day moving average is starting to flatten out, which is kind of positive. Palantir closed the trading session today slightly above a semi-ascending 5-day moving average. RSI at 61 points on the 4-hour chart. So we have the downward sloping 200 DMA sitting at $8.20. So if Palantir consolidates above this 200 DMA, so above $8.20, this could be a sign that the bulls have a first shot at gathering momentum and maybe being able to fill this next gap up to $9.30. This is a previous resistance back from early February. This is an interesting chart, no doubt about it. We still need to see a higher high over here for Palantir in order to be able to reverse this downtrend. So we still need to see the bulls pushing higher. We need to see them making a greater effort. But maybe we could make the case that Palantir already left the worst behind. Yeah, buyers have shown some interest in the stock of this company. Let me take a look at PLTR, supply and demand. What is it looking like? Let me see. There you go. So we have the supply ascending and above average, and the supply is actually above the demand. So not a good looking market structure for Palantir. Keep a close watch on the support at the 200-day moving average at $8.20. If it happens to act as support, maybe we could be seeing Palantir climbing up to $9.30. If this support happens to be taken out, maybe a short, why not, down to this 100 DMA, $7.57. Absolutely, anytime. Okay, I am going to wrap it up with the IWM. This is my favorite market leading indicator. It went up today because the financial sector recovered, and we also saw the KRE, which is the regional banks ETF, catching a break because it has gotten killed recently. And we have some regional banks inside the Russell 2000, inside the IWM. So the IWM is still guilty until proven innocent. It is downtrending below the 100 DMA, below the 200 DMA. The bulls made a little progress today by taking out this downward sloping 5 DMA, $174. But the bulls still have some work to do over here, guys. They need to take out at least $182 for let's say, for for the bulls to show that they are regaining control of the IWM or the Russell 2000 ETF. $177 is an important spot, and the IWM closed today right at $177. So watch out for this level, guys. $177 is a previous support back from September of last year that could be acting as either support or resistance. So if the bulls open the trading session below $177 and they failed at bursting above this level, then we could be seeing further downside, maybe down to $170. This is a previous support back from late December. But on the flip side, if they can consolidate above $177, then we have two gaps that could be potentially being filled. The first one up to the 200 DMA, $181, and the second one up to the 100-day moving average at $182. But the Russell 2000 or the IWM over here looks guilty until proven innocent. So be careful. And let's see what happens in the upcoming trading sessions. Okay, guys, I am going to wrap it up. I'm super tired. You guys know that I live stream throughout the whole trading session for the members of my Patreon. So I'm exhausted. And thank you very much for coming over once again. Let's see what happens tomorrow at 8:30 a.m. Eastern Standard Time. Let's wait for the markets to do their thing, either up or down. And then at 9:30 a.m., we are going to be trading the price action. Thank you, guys. Enjoy the rest of your day. And I will see you in Discord. Bye. Take care. Thanks.